In the energy quadrant, natural gas falling, but crude, again, a little bit better of a mover on the downside. Prices fell over 4% as we hit the low below $61, $60.95. That's the lowest level we've seen since April 2nd, so the lowest level for the entire month, going back to the entire month of April. That $60.95 level put crude futures down, again, as I mentioned, a little over 4%, rallied back a little bit to get back above $61, right in that middle of the range, slightly lower than that to be down almost 3.5% on the day. Part of the issue is record U.S. production that we saw in yesterday's EIA report. U.S. crude production in the U.S. jumped to a high of 12.3 million barrels per day on average for the week ending April 26th. That again is a record high production for the U.S. When U.S. shale production had really underwhelmed for the first quarter of the year, it seems to be accelerating. The inventory levels that the U.S. is holding are right at the 5-year average of inventories, but it's still the highest level of inventories since September of 2017, putting a little bit of fear in the Saudi Arabian production cuts that they're not really working. And on top of that, a short period of lower demand played out in refinery utilization again, as the refinery utilization level fell below 90%. That's the level of total capacity for refining product that refineries put out. Last week we'd gotten to 90.1. That's the first time back above 90 in about 6 or 7 weeks. We fell below it again to 89 and change in yesterday's EIA report. So if we go into turnaround now for the summer driving season, as the EPA demands the blend of gasoline changes by June 15th, that's going to cause a little bit more pullback, and it could cause inventories to build up a little bit more. Hence the speculators getting out of any long positions. We're not seeing new shorts at this point, but those could be accumulating as we speak.